Welcome to our presentation. Our presentation investigates the major statistical shifts in Long An province economy from 2018 to 2020 based on VHLSAT data. We are looking at growth, inequality, and the impact of economic shocks. And my name is Herb, and these are two my friends Quang Anh and Quang Minh. Let's visual begins. Let's start with a big picture of income growth in Long An between 2018 and 2020. The province has achieved truly remarkable economic milestones. Mean income jumped by 54.26%, a testament to dynamic economic activity, particularly in Long An industrial zones. Significantly, the median income grew even faster, by over 86%. This suggests that growth reached a substantial portion of population, not just the top earners. However, this economic success came with a severe cost: severe inequality. Our data shown the standard deviation, a measure of risk and disparity, increased sharply by over 58%. Most alarmingly, the absolute gap between income groups, measured by interquartile range, jumped by 3.39 times. This confirms wealth is highly concentrated. The most critical finding is the minimum income value dropped drastically to 0.547 in 2020. This signals the emergence of new cases of extreme economic vulnerability. Individuals or households who completely lost their income source, income remains heavily concentrated at the top, confirmed by the strong positive skewness at 3.220. To analyze the root causes of this polarization, we employ core inferential statistics. We use the F-test to check if variance were equal, the T-test to compare means between two groups, and ANOVA for comparing groups' difference across multiple categories. Our focus was clear: how do location and household size influence to income efficiency in Long An? Our analysis pinpoints the clear drivers of value in Long An. The highest efficiency is found in urban household size 1 to 2, with a mean of income of 128.438. These urban lean operations are the province's top value drivers, successfully leveraging the services and industrial advantages of Long An's urban areas. The lowest efficiency lies with rural size 5+ household, with a mean income of just 67.339. These larger rural households face severe challenges in optimizing labor and market accesses, and this leads to critical policy mandate. Long An's development strategy must shift focus from general growth to addressing the regional and scale-based polarization. We urgently need targeted vocational training and livelihood transition programs for the larger rural households, whilst simultaneously safeguarding the minimum income group to ensure the province growth is sustainable and equitable.
Let's dive into the inferential result, where we uncover the underlying risk. We have constructed confidence interval for the mean income of the income group, which are quartiles, and the finding reveals widening and concerning gap. Our most critical finding is the first quartile alert. The data show that Long An's poorest group experienced a lower average income range in 2020 compared to that in 2018. This means that while the general economic might be growing, Long An's lowest earners are being left behind. This is a primary inequality issue that must be prioritized in the province's social support policy. Conversely, the third quartile and the last quartile, which are the upper middle and the high income groups, saw significant growth in their income. This has created an internal wealth gap within the province, putting pressure on the social stability, and Long An is facing risks of strong income polarization. Next, we analyze the stability of income, a factor often overlooked in the economic growth reports. We have examined the confidence interval for the standard deviation, which is an indicator of volatility and risk. The results show that the CI for the SD in the second and third quartile in 2020 was significantly higher than that in 2018. This carries immense significance. The income of Long An middle class is becoming more precarious and unstable. They may receive a high salary one month and a low one in the next due to the supply chain disruption, unstable manufacturing activity, or a shift in the labor market. This income instability is a major social risk. It erodes confidence, hinders long-term investment decisions, and creates anxiety among a large segment of the province population. So, our hypothesis tests confirm and intensify this finding, especially concerning the most vulnerable group. In 2018, we note that Long An first quartile group had a significant income advantages over the national poor average. This suggests relative protection or better policy effectiveness. And by 2020, this advantage was completely lost, where the p-value of just 0.578, which indicates that no significant difference. And Long An poor citizens lost their relative protection. They no longer hold a better position compared to the poor in the other province. This demands a critical revaluation of the scale and targeting efficiency of Long An security program. And finally, the two sample tests help us understanding the timing and severity of the crisis impact on Long An, particularly its core manufacturing and commercial sector. The result reveal a phenomenon we call that the market whiplash effect. Long An may have had a relatively strong start early in the year, but the subsequent 3 quarters in 2020 saw a massive decline in the income compared to that in 2018. The most striking number is the extreme negative T statistic, which was just negative 16.304 in the third quartile. This signifies a period of maximum economic stress that Long An endured due to social distancing measures and production breakdowns, especially in the province's key industrial park.
Let's look at two crucial structural shifts. First, urbanization. Long An's rate shift from statistically lower than the national average in 2018 to statistically equivalent in 2020. Second, consumer behavior. We found no statistically significant correlation between income and consumption throughout 2020. This is a behavioral indicator of deep insecurity. Consumers are hoarding cash. This will slow the recovery of local businesses and services. Finally, the two-factor ANOVA on real estate value. Both size and area are highly significant predictors, p-values smaller than 0.003. Crucial. The interaction effect is also significant, p-value equals 2.025. This means the value of a property type changes based on whether it is in urban or rural setting. Long An has a mature, highly segmented market. In conclusion, Long An is at a crossroads. It has the potential for superior development, but faces a major social challenge due to severe inequality and lost relative protection for the poorest. We strongly recommend an urgent policy shift toward inclusive growth to ensure long-term stability. Thank you for listening. We're happy to take your question.